traders, welcome to the TMT Stock Market Strategy video for Monday, June 20th. We got rid of the triple witching expiration on Friday, and I usually don't really put too much emphasis on what happened on Friday. Yeah, we did get a little bit of a push lower, but we also got rebalancing in the S&P, which kind of skews a lot of what was happening during the day. So I just kind of let that sit aside. Now, this morning we have the S&P and the Nasdaq and all of the indices gapping up, and it's also part of the little follow through from the rebalancing. Of course, we had rollover as well. And also, there's a little good news about the Brexit vote. Now they're thinking about it's not happening, and markets rally. So a little bit of everything happening this morning, and so we have a big gap up this morning in the S&P, the Nasdaq. When the transports open up, it will gap up as well. So we really need to know how to play this for this week. It's going to be very tricky, and we have the Brexit vote on Thursday. So I would keep the book light, or if you have a good position and you don't want to get rid of it, I would look to buy some puts or hedge it, however, according to your plan. That would probably be the best and most feasible way to play something like that for this week. Now, with a huge gap up today, for the day traders, it's a little bit difficult because now you have to wait and sit and be patient, so let the price action come to you. I'm going to show you a couple of things here. In a premium video, we go through it extensively, but I just want to show you we don't have enough time. So I want to get over a few key points today and see where this market may be headed for this week. Now, if thinking about it logically, if the Brexit vote were to happen, it would create havoc, worldwide havoc, all over the world. That's why I would suspect that the central bankers are smarter than that, and they're all talking to each other. Don't think they're not, but they're all talking to each other because every central bank has put trillions of dollars into their markets, and they're not going to let that just go to wasteland. Now, I do think that there is a bigger move to the downside brewing, and I don't think it's the Brexit vote, but I'm seeing a lot of internal stuff that I'm watching very closely for many years, and it just doesn't look pretty. Maybe we get a shock in the markets, and then that would be it. Again, the markets are let me rephrase that, fully valued at 17.8 times earnings, up at these levels here. So, the Fed and all these central banks want you to continue to buy the market so they can help them. And it's not happening, right? There's all the safe haven trades are moving to the upside. You have the REITs, the telecoms, the healthcare sectors, all that interest sensitive, they're running higher. Gold, look at gold. Gold is insane. Gold doesn't act like this for nothing. There's a reason behind it. A lot of the bigger players, Soros, Carl Icahn, and there's many more that are buying gold and they're looking for a huge move lower. Now, you can't time that, but it is happening. You look at the COT reports, commitment to trade reports, big bearish bets to the commercials for in the S&P, long the VIX, and these are the commercials now, the smartest guys on the report here, okay? And of course, short the market. So there's something big going on here, and of course, no one knows when or what it is until it happens. But the charts do not lie, okay? They are free of any pundits talking about the market up. So just keep that in mind in the back of your head. Now, for the day trader, really, it's okay, but you still want to know what's going on. You still want to know what the bigger trend is and what's happening. So let's get right into it. I want to show you the USB. I've showed this before. This is a 20-year chart of the weekly USB 30-year bond. Now, I blew this up for the last couple of years because I wanted to show you this uptrend line. This uptrend resistance has been intact for 20 years. That's significant, guys. 20 years. And look at where we are here last week. We closed last week right at it, right at that line. Now the stochastics are reading a little bit overboard. MACD has not, and RSI still has plenty of room to run. I think if we can get 2 weeks of closing up above here, this line, I think money will run into bonds. Bonds would explode. Yields will continue to go down. Banks will help the market sell off. And then technology, which as we all know isn't really doing so great at the moment, will start to roll over and help the sell-off. Now, remember, we're at the line now. We could fail again and go all the way back to the 20-week moving average, and then start all over again. So, but just this is significant, guys. This is not oh, we're just going to park some money. The bond guys are the smartest guys in the room. So just something to keep an eye on. Okay. Next is our trusty advanced decline with volume, the NYUD. We look at where we are. We sold off for a few days, and look, we're still below zero, lower lows and lower highs. This could be another peak of another low, so we need to watch this closely. But we're below zero, okay? Lower low, lower low, lower high, lower low, lower high, and now here. Even if we came to 50 and then start to fail again, you're still making lower lows and lower highs. You have bearish symmetry. So this is not a good sign. Okay, this is one of the better indicators of measuring a breadth of the market, and this is not a good sign here. Okay, next is going to be the VIX. Now I mentioned, guys, watch the VIX because you know, when you get explosive moves like this, you will get explosive moves to the back to the downside. Okay, so you know when you get these big moves, you want to take the profits right away. You don't want to just hold these because these are skewed instruments. Okay, this is only hedgies and money managers. They look to buy this when you have uncertainty in the markets and you have volatility start to creep up. So they do this to protect their portfolio. This is a great trading vehicle for us if you can identify it and understand it. So you don't want to be looking to start buying up in here, okay? And with the big gap up, I believe the VIX is probably back down to 14, 15. So this is where you want to start looking for bases, new bases like this. See these little bases that happen even in a larger, you know, into the Bollinger Band. This is something that I'm looking for now. Now that the VIX has really sold back down again. Now it's enticing me to look into a long trade. Not yet, but this is something that we want to keep an eye on. Okay. Let's take a look at VXX, and here's the same thing you can see back to this line here. The VXX will probably fill one of these two gaps this morning, but now it's looking more interesting again. All right, never chase, never chase anything for that matter. All right, let's go into the index. Let's take a look and see what we got here. All right, spiders daily again, right to the penny. So we need to kind of monitor, see what's going on here. We're going to have a big move up, probably right up into that 20-day moving average. You could see that we're starting to do some curling back up into the momentum indicators, RSI and MACD. All right, but we're sandwiched between these two lines here, 211.75 and 205.65. Okay, those are your two big targets here, and that's where we're just trading in a range. You can see pretty much most of April, May, June, we've been in a range. We've been range bound. All right. And when you identify, are we trending or are we in ranges, you need to change and adapt your trading style. Okay, not to change it in totally, but just saying, well, you know, if I'm in a range, I'm going to be taking profits a little bit quicker. All right, and here's that daily chart I showed you, just clean price and our volume zones here. You could see that one, that number is still going to be important, 202.70, 202.77. If you don't think price can get up there after today, think again, trust me. As fast as it moves up, it will move as much faster to the downside. All right, inside day from the big reversal day here. So, you know, something, again, something to keep an eye on. But I want you to be aware where we are in price, okay? We're at these lofty levels here, all right? 60-minute, we got a couple of gaps. We need to we're going to fill that today. We're going to roll back into these areas. But you could see here, we're starting to move higher highs and higher lows in the RSI and MACD. So constructive a little bit to the upside, which is good because we don't want to be selling short and a hold. If the markets are to sell off at one point, you want to keep them at these lofty levels because this is where you're going to make a lot of the money and easy money. All right, transport, same thing, guys. Look, you can see here since early March we've been in a range, but look what's happening here. We have that M-top formation. We're back to the neckline again, and again making lower lows and lower highs. That's what you need to identify when you're looking at these patterns: lower lows and lower highs, bearish symmetry. Okay, and you really got a really big downtrend channel. I wouldn't call it. Looks like a bull flag, but I wouldn't call that because this is too long in the tooth. So downtrend channel, we'll probably hit that again, and then we'll probably back up until it really breaks lower. Transports, though, our leader is not leading. All right, important. You got to know that. IWM, here's some upside targets here of resistance, and you can see the proprietary price channels that we created are holding true right now, but barely. If we can lose that, we'll probably hit that little downside area of 111.50. All right, and very little support to the downside. Okay, spotty actually. And lastly is the Qs. And you can see the Qs really had a tough day on Friday. Apple was one of it. Beijing halted Apple iPhone sales. And so, you know, the market went down on that, and also the rebalancing. So something really you got to watch here. And I'd watch Apple closely. Apple, and I had a couple of emails about Apple. Apple comes into seasonal strength somewhere around the last week in June up until the third week of July. And it rallies pretty hard in that area in July. So this might be a buying opportunity coming into coming into weakness here on Apple. But again, only for a trade. All right, that's something that we got to look at going into the next couple of days. All right, guys, I hope it helps. It's not much because we need to get a couple of days of trading now to see where this market may be headed before the Brexit vote. Okay, have a great day, guys. We'll talk to you tomorrow. Take care.